The Nigerian government have begun selling crude oil and refined petroleum products in naira starting October 1st. The finance minister, Wale Edun, confirmed this move following a Federal Executive Council directive. Now, the initiative is aimed at reducing pressure on the dollar, stabilizing the naira, and supporting economic growth. Under the plan, the Nigerian National Petroleum Company will supply 385,000 barrels per day of crude oil to the Dangote refinery with payments made in naira. This move is expected to reshape Nigeria's oil and gas sector and improve key economic indicators, including foreign exchange reserves. Well, as the Nigerian has begun selling this crude oil and refined petroleum products in Nigeria, we have our guest Esili Eigbe in the studio with us to discuss how this impacts the economy. He's the director of Escap Management. Thank you for joining us this afternoon.
Good afternoon. Thank you, Awa, Cynthia. Always good to be back.
So, petroleum products in naira, what are the implications starting from the very bottom to the top?
Well, let me start from the top. The top being the fact that, they'll be selling crude to Dangote, in naira. Mm-hmm. The bottom line there is that Dangote, for one, wouldn't be buying, crude in dollars. Mm-hmm. It's obviously scarce. They wouldn't have to demand dollars from the central bank, that's got limited, obviously, the dollar reserves. So I think that that's a positive. And we, obviously should take out the unnecessary demand for FX in the market and should begin to ease the pressure that we've had in the naira for quite a while. Mm-hmm. And I think it's very important because, the import of petroleum products is the single largest, consumer of dollars that we have in Nigeria today. So you take that out and it creates an immediate relief for the system. So I don't want to get excited, in the short term, okay? But I think that with those type of policies, clearly I think that the medium term, long term is very bright. There's still, I think, a number of, challenges or teething issues that they clearly having to deal with, because I don't know if you saw this morning, Dangote did mention that they haven't received any crude, despite the fact that the Minister of Finance said they started this since the first. So we'll like to see, I guess, the consummation of this particular transaction. I think that it's very, very, very important. And I would say most importantly, in line with the laws of the land, okay? PIA, it's in there. Mm-hmm. It's not illegal. You're not exactly creating a new law or policy here.
True. Now let's talk about the timing of this policy. It coincides with significant external debt obligations. So how does selling crude in naira affect our ability to service these dollar-dominated debts?
I suppose it's safe to say that then you can reserve some of, the gains that you have, from not having to source dollars to now deploying whatever those savings into paying our dollar debt or service obligations, which, from all I can see today, there was the mention of it, going over 6 trillion naira last week from the Debt Management Office. We project that it will probably do somewhere around over 15 trillion a year. That's probably just about what the government will be able to generate in total revenue, in the 2024 fiscal year. So it's a big issue, that's obviously just contextualizing the debt issue, okay? We think we'll close the year at about 130 trillion naira of debt. As at the first quarter, it closed at about 113 or thereabout. So it's a big issue, and I think it's something that needs to be addressed urgently. And to that, I believe that the government needs to focus more on cutting expenditure, consolidating. Okay, I do appreciate some of the measures that are being put out, i.e., cutting, removing VAT, import duties, etc. Yeah, those are also complementary. Okay, but I think that the real big elephant in the room is this bloated government budget, if you want to call it so. Yeah, we now have a budget for the fiscal year 2024 that's over 30 trillion in an environment where, as I've always said, spending more doesn't help improve inflation. If at all, it makes it worse. I know it's seldom that the fiscal policy works with monetary policy during tough environments like this. But with inflation at over 30%, I think that it's urgent that they do something urgently to address the issues. Otherwise, a lot of people will suffer.
Yeah,
We have quite a lot of vulnerable people. Easily more than 50% of the Nigerian population vulnerable. So inflation really needs to be I'm happy to see that the finance minister is taking it, I guess, seriously in some ways, because it seems like almost every week there's either a pronouncement or the other with respect to trying to ease. But like I said, the real big target is government expenditure, which in my opinion needs to be more than halved.
And just to play devil's advocate here, knowing how things tend to happen in the country, it does sound like this should be a day of excitement. It's something that we've been waiting for, right? But what could go wrong in this?
You mean with respect to the Dangote transaction?
Yes,
okay.
Right. What could go wrong?
Well,
just asking, because we just, that's...
No, it's a fair question.
Something you have to consider,
given
the climate.
I guess, the climate, like you say. I've been skeptical that they just might not be able to pull it off as early as we think. All of us had
Timing.
Early October, in our minds. It could end up dragging to the end of the month, middle of the month, November. We don't know. But I guess given the, lack of sufficient information on the issue or transaction out there, it's safe to assume that this is not exactly a done deal, even though it's been signed. I think that if this was actually sealed and there was cargo already moving, back and forth, there'll be a lot of stories in the papers about this, but we're not seeing that.
No.
Okay, let's look at the mechanics of pricing in terms of how the naira crude price will be determined. Will it be pegged to the dollar price? And if so, which exchange rates will be used? Official rates? Are we talking any other benchmark? How?
Well, maybe if I start from your last question, the rates are, they're kind of around the same area now. There's already, they've harmonized in some ways. So I don't expect that there will be any sort of preference. It will be the official rate, what we call the official rate, the rate at which the central bank references, and what's also used interbank. So that for me is not really the main concern. The concern is, are we finally moving away from subsidies or not? And so in which case, can we now redeploy whatever we've been spending on subsidy to other areas, health, education, et cetera, But it seemed to me that based on the pricing model that you mentioned, they are pivoting that way. The fact that they recently raised, gasoline prices was pretty much a conviction that that's the case. At the very least, they have significantly cut spending on subsidies, and we suspected that would be the case, given that, the Dangote refinery was already beginning to produce gasoline in significant volumes. So we'll have to see how it goes. I think that there's quite a lot that they're having to weigh. There will always be political pressure to make sure that the prices do not move as quickly as it could move in a sort of open market or market-based system. So a good example was, I was on, CNBC talking about, just the fact that given where oil prices were, I think 2-3 weeks ago, the landing cost of gasoline in Nigeria was sub, 900 naira per liter, which meant that if the NNPC were to price the product at somewhere probably close to about 1,000, around about 1,000, then that would effectively mean that all subsidies have been taken off. Yeah. However, we woke up this morning looking back over the last week to see that with the geopolitical tension in the Middle East, prices have moved up another roughly $8 or $9 since then. So these are the issues. And so I can understand from a political perspective if they do choose to try to manage it as we go along. But I think they haven't come as far as 900 naira per liter from 600 naira. That's a big relief. And hopefully, we either move towards a complete removal or manage it at these current levels.
There's always that political perspective.
Yeah, you can't avoid that in economies like this. It will be like political suicide.
Yeah.
Right.
So for the layman, the average working Nigerian that probably is watching this and is like they're speaking a lot of English, how does this affect them? Is life going to become just a little bit easier? Are the prices of things going to drop, et cetera?
Drop how? I just said prices will go up. So I just want to be clear.
For the average Nigerian.
They will go up, okay? Gasoline prices will go up. The naira itself weakened over the course of last week. I'm sure you're quite aware of that. That itself had its impact on other products like diesel, aviation fuel, etc. So the reality for the man on the street is that prices will go higher, and it was the main reason that the central bank decided to raise or accelerate its pace of monetary policy rate increases by 50 basis points as opposed to the 25 basis points they increased during the last MPC. I think that we still have, to be honest, another year of rising high inflationary pressure, assuming that the government continues in this this manner. I think that a lot could be done much quicker if the government did choose to consolidate its spending. But unfortunately, that's not the path we've taken. We've taken a much more difficult stance, and I would say that it would be very prudent for the central bank to maintain its course and keep raising interest rates, in my opinion, up until where we're having positive interest rate, real interest rates. Because what you really want to do is attract foreign investment. And you can't do that in global environment where I'll say interest rates from a lot of other emerging markets are very competitive. The central bank rate in Turkey, for example, is 50%. Argentina has it much higher, and there are several other countries. Ghana has it, in excess of about 25, 26%. So you need to be competitive. So when the investors are looking at how to, where to put places money, they're not just singling out Nigeria and say, oh, Nigeria has 200 million people, that's the market to go. You're looking at Turkey, for example, that in my opinion has implemented, much more, reforms than perhaps any other country that you find in African market. But to your point on the man on the street, it's going to be it will remain a difficult year and a half still. And that's why, the issue of direct transfers, safety nets is very important. I mean, clearly the government doesn't have sufficient resources to cover everybody. And even those that they'll be providing those reliefs for, I don't imagine that those reliefs will be sufficient. But it's something when you probably wouldn't get anything. And I think that's why some of those measures, like removing VAT, are important, because they just provide very little relief, which is still something, in addition to so many others.
Okay. Well, let's talk about the debt repayment aspect. Now, of course, we know that the debt-to-service ratio is already concerning in the country. But with rising debt repayment obligations, what specific strategies are being considered to prevent a debt crisis?
That's a very good question. And I think that the first step is to restructure the debt. Because the bulk of our debt is concessionary debt from the World Bank and development institutions. You go to them and say, look, can we either delay repayments or half payments for now, or stall payments up until the next 2 years? Let's sort of get our act together, and we can come back. So I think that's possible. However, and it's possible, and I believe those discussions are ongoing. Yeah, the fact that they're looking to remove fuel subsidies also suggests the same, that they are engaging the World Bank or the IMF, with the goal of getting some sort of relief, and perhaps in addition, loans as well, okay? So that would be, for me, the first step. The second step is some of the other things that we've talked about, then cutting government spending, and then focusing on more productive sectors, deploying it to more productive sectors as opposed to, say, subsidy, healthcare, investing in human resources, developing labor, et cetera. So I think that obviously the return on those kind of investments, I thought that they can start being productive after about a year, 2 years. And if you look at some of the pronouncements from the Ministry of Finance last week, targeting zero VAT on equipment used to either maintain, service, build gas infrastructure. Those are projects that are sort of long-tailed. They do have sort of productive effects over the medium to long term. So those are examples of some of the projects that they need to be sort of steering to get some payback by way of just boosting the economy, also increasing government taxes. So those are essentially, I'll say, the first set of steps I'll take in sort of addressing the debt issue. But I'll say one very important measure that needs to be taken that has both short to even long-term implications is that we need to set a debt ceiling. Nigeria doesn't have a debt ceiling, okay? And I think that that's what's led to the crisis that we're currently in. We've done some work that suggested that Nigeria is amongst nations in the world that are at risk or already have a debt crisis. So this is a very serious situation that we're in. And so the lawmakers, obviously this has come from lawmakers, they need to put in place a debt ceiling for Nigeria. There's already some sort of limit in the sense that the government can't spend or shouldn't spend more than 3%, okay, of the GDP every year in deficit, okay? That's already there, but it's just been kind of ignored, if you want to say, yeah? Or I guess the fact that the lawmakers can kind of override that has kind of allowed, given them the bandwidth to do so. But like I said, a debt limit, a debt ceiling, I think it's very important.
Well, yes, that is
A debt ceiling.
a debt stratosphere.
That's the hashtag for the day.
No, a debt
More
ceiling,
like
that is a level over which you can exceed your debt.
Right, you missed the joke, but we're out of time. Thank you so much for joining us, Esili Eigbe, the Director of Escap Management. Always good to have you here.
Thank you.
On News.